Tascha Che, Tascha Labs, TaschaLabs.com. Welcome to Real Vision.
Thanks, Ash.
Tascha, you do really cool content about DeFi, about blockchain. You recently smashed a diamond on your YouTube channel, do some really cool stuff. First of all, tell us a little bit about your background and how you got into doing what you do right now.
Sure. I'm a macroeconomist and an investor. I got my PhD in macroeconomics from Georgetown University, and I worked in economic consulting for many years. I also invest in technology, and currently I'm the owner of a SaaS company called Soundwise, which is the audio publishing platform for independent creators. You can think of it as a Audible that creators can control. And my first get acquainted to the blockchain crypto space in 2017. At the time, I had a lot of startup friends. The running joke about getting VC funding is your first sentence of the pitch needs to have blockchain and AI in the same sentence. At the time, I just, didn't really see the point because there wasn't a really use case, legit use case for blockchain at the time, as the way I see it. It's just people, apply blockchain to something that could be, equally done and done better with the existing technology. So I didn't really see the point until early last year, I would say, when DeFi started taking off. And I started taking a more serious look about the space and started to realize the huge implication about DeFi and NFT and the blockchain space. And I started writing more and more about it. I already run a weekly blog of sorts, but I just somehow, with unintentionally, I started writing more and more about crypto and, going down the rabbit hole.
Yeah. So tell us what your thoughts were, why you began to see probably 2 years ago this ecosystem that you thought really had potential to change the way that commerce, finance, investing, and even macroeconomics plays out in the world today.
Oh, there are, so many aspects to this. But I think what I saw, since last year, that was different from 3 years ago, was that there started to be a real economy that was being built out on chain in the so-called Metaverse. Okay, right now it involved both, basically DeFi and NFT, but it will expand to much more. So what I realized is it's really a new way to organize the economy. And all the layer one chains that we know today, Ethereum, Solana, Avalanche, and so on, to me, they are providing the critical infrastructure to the metaverse. And they are sort of like the new nation states in the digital economy. And I call them nation states economies because they have their own economic ecosystem where, all the stakeholders and players rely on each other with doing economic exchanges, just like in real life. And there are products and services being offered on chain in various degrees of decentralized manner. And these layer on chains, they have their own, what I would call the fiscal policy and monetary policy. The fiscal policy is that the layer one chains, when you transact, when you're doing any activity on chain, you're being charged a transaction fee. And that is, you can think of it as similar to nation states government charging a tax on every, economic activity that's happening in its regime. So that's how the chains get revenue. But in reality, we know that's not the only way the government gets revenue, right? It's not just from taxes and fees. It's also from monetary policy. So just like nation states governments, these layer one chains, they issue their own tokens, which is, needed in every transaction. And that creates organic natural demand for these tokens, aside from any, speculation or store of value purposes. So it creates a tool for these layer one chains to have a monetary policy through token issuance and token burns to distribute economic gains that's happening on the economy. And, and also to allow the shareholders, the stakers on these layer one chains to share a portion of the economic value added that's created from these on-chain economies. So to me, these are all the various ingredients adding together, making the layer one chains plus metaverse very similar to national economies that we see in the so-called real life.
Let me zoom the camera out a little bit, Tascha, because you've done a very good job of explaining the way these layer one protocols function in your view as a formal system and how analogous they are to real world economies by nation states. But for people who may be relatively new to this space, maybe they understand it as a formal system as you've just described it. But what's the end user demand? In other words, as these economies begin to grow, where will the ultimate demand come from? What are the services that they will provide, and how will they add value in the lives of their participants?
Well, right now, we all know it's right now the economy of the metaverse is still very small. We have DeFi, we have NFT, and most people, they look at these, they're like, these are just speculations. But in fact, these are very competitive industries already, and I think they're well positioned to disrupt some existing very important, off-chain equivalents, off-chain counterparts. So take DeFi, for example, it's a disruptor of traditional financial system, right? So many people would say, well, DeFi have value because, it's not regulated and people don't have to do KYC on those. So it's very easy to onboard and you have these high leverage ratios. That's why, the DeFi grow. But in fact, it's a lot more sophisticated or complicated than that. You think about the traditional financial services, starting a bank obviously is a huge pain in the ass. And that makes banking sector a natural monopoly. And that's why, you get very slow innovation, because once you're in, you start a bank, your life is good, right? You're protected from competitions. But in DeFi, it's totally opposite. You have a huge share of your cost of running a DeFi app being already taken care of by the layer one chains, right? Your security, your payment transactions, your user account management, all that important stuff, that cost is being, you don't incur that cost. That cost is being incurred by layer one chains, which is paid for by, the users of layer one chains. And on the other hand, your reach is global. Unlike in traditional banking sector, it's very geography bound, which is another reason why banks, credit cost of traditional banking sector is high, is because you're limited by the geographical size of your market. And when your market is small, you have to have a sizable margin between your deposit rate and lending rate, roughly speaking, in order to make money. So that makes the cost of the financing cost very high in smaller economies. But with DeFi, your market is global. You can have someone in Ireland provides funding, a depositor in Ireland and a borrower in Vietnam, and the transaction can go through in seconds. So you have this global reach. You have very cheap, setup cost. You can start a DeFi app in like $50K. I think you can push out your first version of apps, even without copy paste from other existing protocols. So it makes the cost of running DeFi very minimum compared to traditional financial system. That allows the system to innovate in such warp speed that traditional finance just cannot even imagine. So obviously, this reduces the level of moat that you can have for individual DeFi apps. But as an industry as a whole, that is a huge plus. And we will continue to see a lot more innovations coming from the space, just because of these, very intrinsic, cost advantages and the economy of scale of the DeFi industry as a whole. So, and for NFTs, I know most people, nowadays still think it's, JPEGs you can right click and download. So, but that's fine. This is, to me, we are in the sandbox version of NFTs.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.